In this video, I'm revealing one of my favorite entry models in the markets, and when I see this setup play out following my entry criteria that I teach, I will take it with no doubt nor hesitation. I'll also show you some trades of mine as well during the video, and lastly, if anyone needs a one-to-one mentorship, check out the description. This is Luke from ZCFX Trading, and let's get into it. Now, the Asia run process is pretty much just a consolidating period within the markets. As we know, the Asia session is known to consolidate typically due to the lower volume, aka lower liquidity, and it's known to do that and doesn't really move more than 20 pips, and you especially see this more as you go and test it yourself. Now, I've used multiple times. You don't obviously mark up the whole Asia session. I've used multiple times. I've done that in the past. I've done from 10 till 8. I've done from 10 till 5 the previous day before. But from what I've backtested and the data that I've gathered over the years, from 12 AM to 5 AM UK time is the best time to be using it. Now, it's pretty much, like I said, just a consolidating period within the markets that is later on manipulated in a later session. Now, the Asia run is marked up between the hours of midnight, which is 12 AM to 5 AM UK time, and this 5-hour window gap will often be manipulated, either pre-London or in a later session. We can use this in accordance with a high time frame bias or trade solidly M15 to M1. Now, it's important to not get fixated on waiting for a sweep, so focus more on the structure and adapt with the market. For example, if you have like a POI above the Asia high, then that POI, obviously, if it sweeps that liquidity of the Asia high, then it has a higher chance of holding and being respected. Now, you can align this up with high time POIs like I just mentioned, or for me, that high time frame is M15, sometimes H4, or alternatively, you can just use or just wait, for a sweep and then drop down to the 1 minute, which isn't really recommended, but it's still a possibility. Now, as you can see on this example here on the screen, the grey lines represent the 15-minute time frame and the blue lines represent the 1-minute time frame. Now, as you can see, we've got the Asia open, we've got the Asia high and low, and we also have the Asia session close, and this is the time from 12 till 5 AM. Okay, like I said, we'll go into the markets and show you some examples as well. Now, as you can see here, price is pretty much sort of consolidates, doesn't really go anywhere, doesn't make any new highs and lows. It just sort of consolidates side to side. That's a very, very typical Asia session, and as you can see, as the session starts to close and we head into pre-London or even just into London Open, you can see that price takes out the high, and then we get a shift, aka a chock to the downside, and then a pullback to the POI, and that is where we'd like to enter. Okay, now if you want to look more into an entry model, like in terms of how to increase your win rate and actually how to get triggered into a trade, make sure you check out my other video on candle confirmation. It's something I put together, and it definitely helps with these type of trades rather than just blindly setting like a limit order off it, for example. Okay, so go ahead and check that out. But like I said, as you can see here, very simple. Price takes out the high, we get a shift on the low time frame to the downside, so we can start to anticipate a potential trade to the downside. Okay, now it's important to note, guys, that this, if you are trading counter trend, so for example, price has been bullish but we just swept out the highs and you're looking to take a sell, that is classed as counter trend. And in these cases, obviously that's a low probability setup as opposed to waiting for the lows to be swept and looking for buyers in that bullish market. But if you are going to take that counter trend trade for some obvious reason, then you should ideally look to close it around the equilibrium, which is the midpoint of the Asia session. So between, you got the Asia high, Asia midpoint, and the Asia low. Now, I don't mark up the midpoint, but it's just a rule of thumb that I've taught to my students, that if you are trading counter trend, which is obviously, you can still trade counter trend, don't get me wrong, like aka anticipating reversals, but it's lower probability to be trading that as opposed to trading pro trend. Okay, now if you counter trend, let's close it around the midpoint of the Asia session, because sometimes you'll see that happen. It will come down, it won't go all the way to the Asia low if you took out the Asia high, and vice versa. If you took out the Asia low, go to Asia high. Sometimes it'll just come down to the midpoint and then reverse back up to what it was doing, or back down to where it's going. Obviously, if you're pro trend, a rule of thumb is you can look to close out at the opposite side of the session. So if it's stuck at the high and you have a sell bias, you're in a sell position, ideally you want to target and take out that low. Vice versa, if it's stuck out the low, the Asia low, and you're in a buy position, you can go ahead and look to target the Asia high, because it's still liquidity. Okay, this is a form of liquidity. Liquidity is everywhere in the markets, but this one has a very high probability of holding in the markets, and I'll show you guys the real charts now. We'll go over some previous data and you'll see for yourself. It's a very high probability like sort of approach that you can follow. For example, just wait for that session time. So the key thing here, guys, is make sure you're timing it well, make sure you're getting the correct entry method, and make sure you're waiting for that shift. And so basically be patient and just let the price play out, and then just react to the market. Obviously, like I said, well, not like I said, but like I'm going to say, nothing is 100% in trading, and anyone that tells you different is just completely lying. This doesn't work 100% of the time, and no system does. So you'll see that on the charts. I'll just be transparent with you guys. Win, loss, break even, whatever it is, I don't care. I will show you guys. I'm not going to try and make excuses. I'm just going to show you completely raw, unedited live charts. So what we'll do is we'll go ahead and jump into that. But before I do that, guys, I quickly want to mention, if you want this chart image here that you see on the screen, you can either go ahead and screenshot it, or if you want it a bit more clearer or whatever the case, you can go ahead and drop me a message on Instagram or Telegram or Discord, and I'll go ahead and send that to you. Obviously, Asia Run is something I teach as well in my one-to-one mentorships. People are interested in that and learning how we can apply it in the real markets in terms of looking for an exact entry with a high probability setup. You can go ahead and check out the mentorship for that as well. But guys, let's jump onto the charts and show you some examples. So now that we're on the charts, obviously first things first, what you want to do is mark up the Asia session. So it runs from 12 to 5 AM UK time. So if you want to convert that to your local time, make sure you go ahead and do that. And yeah, it's UK time. Make sure you just calculate that, because it can even if it's off by the hour or two, it can definitely impact it a little bit. So as you can see here, we've got a box here. So what you want to do is you want to go over to indicators at the top of the trading view page, and you'll just want to type in, well, there's multiple ones you can use. I personally use a different one, but you can use FXN Asia session range, or just go ahead and type in Asia session range or whatever it is, and then pretty much I've got this one called market sessions, so you can go ahead and type that in. It should look something like this. I've got it from 11 till 4 because obviously this is slightly off by an hour. This is back an hour, so hence why it's those times. So just want to mess around a bit, because obviously if you use that indicator, it might show up different times. So just mess around with it until it's obviously the way you want it to be. And if you just take a look here, guys, just jump straight into it and show you some examples. As you can see here, if we just go to 1 minute to show you a bit more clearer. Wait for it to spawn in, if it's going to spawn in. There we go. Now, as you can see here, total 5. Very simple. So for those of you who are still wondering, like I've taught this in the past, like years ago, and you're probably still wondering, well, is it still working? And well, here's your answer. So as you can see, we've got the high, got the low over here as well. So this is the low of the session. Remember, guys, the key is that it won't really move more than 20 pips per session. So if you were to mark up the range here, this is only a 12.3 pip move. It rarely goes over 15 to 20 pips. It's always below that. And as you can see, guys, here we took out the high. We then moved bearish. It can just kind of help with biases if you were one of those traders that have biases in the markets. As you can see, took out the high, moved bearish. We then took out the low and moved bullish. So this is an example of playing both sides of the market. Took out the high and then the low. Sometimes it'll just take out the low, sometimes it'll just take out the high, sometimes it won't work. So moving on to the next day. See here, we took out the low. We had a huge bullish move to the upside, and again, timing's key. We got London or Frankfurt open here, and which explains the rally to the upside. And no doubt there's a fundamentally driven move as well. But again, took out the low. That set the bias for that day, or for at least that sort of morning session. You can catch a beautiful entry there. This one, you could argue whether there was an entry or not. Personally, my sort of kill zones in which I trade in, I wouldn't have really entered. I mean, you could have argued that you could have got an entry within here, potentially catching a reversal. I mean, we did reverse at this peak here around 10:30 or 10:45, so quarter to 11. And then we did take out the low as well over here, but later in the day around, well, New York Open, New York Stock Exchange Open more specifically. And then obviously we had that spike there. So, I mean, I guess you could argue whether there was an entry or not there. So it's up to you how you wanted to apply this one here. I mean, if you're looking for an entry off here, which ideally really isn't like pragmatic, just because the overall trend is bullish just based on looking at this bit of price action there. So If you were to look for a sell there for whatever reason it is, and you took a loss, then no worries, you could have potentially got a nice entry later on in the day, vice versa here as well. But again, took out this high, moved bearish, took out the low, and then moved bullish again. So could definitely help if you can't already see where I'm coming from. Again, took out the high here, moved bearish, took out the low, moved bullish. Did come back down, but then eventually went on to take out the highs as well. And again, guys, just a quick reminder, general rule of thumb is that if it takes out the high, you can target the low. If it takes out the low, you can target the high. But obviously not always will it work like that. Again here, guys, we got this low here, which is taken. And then obviously we started to see a reversal. And up into those highs there. So if you're looking to target, you could target into those highs. Or if you had high time frame biases, you could have probably targeted into those overall highs. This is a better example in my opinion, especially this one over here as well. Just because the price is bullish, we swept out the low first, and obviously if you had a bullish bias based on the bullish price action, then it lines up with that. So that's a very nice sort of entry there to take. But yeah, what I would recommend you guys go and do is just go ahead and look at it. You know, it's a very profitable way of trading. This one didn't take out the high. Well, it took out the low, but it didn't really reverse. Fair enough, didn't work here. Taking a loss there is what it is. You know, when you apply it a bit more in detail, for example, like something that I teach is this, you know, price being overextended. At this point, you can just tell that price had rallied, right? So if we were to take out the high, fair enough, I'd love to sell there. That'd be great. But as we took out the low, this has a lower probability of holding to, you know, price took out the low here and move bullish, just because of how overextended price looks on the higher time frame. Okay, I won't go into that in this video. Maybe I will in the future video, but that's something I teach as well. And again, sometimes it'll move the way you wanted it to do so, and it didn't take out the low. So it's important to react as well. I'm just going to throw a couple of gems in here. So it's important to react rather than trying to predict. You know, sometimes price, you know, like this here, for example, right? You'd be waiting for the low to get taken because that's the liquidity area here. Because at the end of the day, guys, the sort of preferable process I like to enter is just a liquidity sweep, and then significant shift in structure, and then a pullback to the POI, and then a candle combination to just really put the cherry on top. So as you can see here, we didn't take out the low, and we just moved bullish. So you could have entered on this imbalance here with this POI. To adapt to the market, you could have entered off this area as well. So the entries are there. Make sure to react, because if at this point you're still waiting for price to take out the low, well, you're going to be left behind. So it's important to just adapt, you know, react and adapt to the market, essentially, so to speak. So just keep that in mind always, guys. And yeah, just going back to what I was on about with liquidity. Liquidity is everywhere, but this is a form of liquidity. Okay, the Asia session is a form of liquidity, and that's just what I simply follow. More so. Now, as you can see here, we took out the low and obviously reversed here, and then we took out the high and then reversed back down again with a huge sell off to the downside there. Another fundamentally driven move. This here, guys, as you can see, we took out the high, we got a reversal around here, and then we sort of created equal lows, but we didn't take out the low, we just sort of created equal lows, and then we bullish again. So that could have been, you know, used as liquidity in a later session. Well, not a late session, but, you know, well, yeah, late session. You don't know when the liquidity is going to be swept, but you know, fortunately for this here, it was the next day. So as you can see, that could have been liquidity there for price to, if you had a bullish bias, that would have been a very nice trade. You know, you got a sweep of the liquidity here. Obviously, you got equal lows, so people will be looking to buy from here based on support and resistance, just following that. And obviously, that is a swept there, fundamentally driven move. We've got a chuck here and a wick back down into this area. So could have looked for an entry there. Very, very nice. Which also lines up with the previous structure here as well. I'll show you guys a few more examples, and I'll wrap up the video. I don't need to be sat there really. I'll show you loads of examples. Now, if you do want to see some trader recaps following Asia run, make sure you go ahead and check out some of my trader recaps, because a lot of the trader recaps are based around the Asia liquidity sweep. So make sure you go ahead and check them out. But as you can see here, we took out the high. We've seen a reversal. It was quite a complex pullback, quite sluggish, and yeah, as you can see, we sort of pulled back into this demand area, so you can trade down into that POI because the price is obviously bullish here, and we've seen a nice push to the upside, and then stayed below this overall peak high, so we're holding the trade down here, and then it took out the low, and then as we headed into sort of a mid New York session, we started to see that bullish move. So A lot of the time it will be swept during London. Sometimes it will be swept during New York. It's just about, you know, timing can differ. Not every day can you expect to get in a trade. Like for example, you know, if your trading hours are between I don't know, a certain time, it may not sweep until, you know, later in that day, and you may have missed an opportunity. Not essentially missed an opportunity, but you may have missed that play out that it played out because you have your kill zones on which you operate in. So it's important to just sort of say, you know, consistent with what you're doing in terms of like the times that you're trading in. And you can only really find that out once you're, you know, through a lot of testing and data collection. So make sure you're collecting that data, make sure you are back testing, and go ahead and back test this. Some days it's choppier than others, some days you won't find opportunities, some days the setup may not present itself, but guess what, it's fine, it is what it is, part of the game. Nothing's 100% in trading. This is just a system that's quite reliable in the long run, so it's important to stick to it. So yeah, as you can see here, we took out the low, didn't see a reversal until around 9:30ish. Fortunately didn't take out the high, but did mitigate a POI. And again guys, remember, if it is counter trend, like this one here is counter trend, right? Because obviously, just look at this, price moving bearish, okay? We only didn't see a bullish move until we got to this significant shift here. Significant shifts in the markets is a key to look for as well, especially during reversals. But if you're here to, you know, buy based on this move here and price overall bearish, that's fine because it's kind of a trend trade. But just be pragmatic with your TP placement. Don't try and aim for all the way up here or even the highs in some cases. You know, follow what the textbook plan says. That you can, guys, if you know the one I showed at the start of the video. So make sure if you want that as well, just send me a message. They know you want it, and I'll send you it. And yeah, just target the midpoint. That's a sort of good area to target in terms of if you're trading counter trend or even the lows. Like for example, like that. Just draw a line through it. You can target there as well, or just target like a fixed 2 to 3R. That's all you need. Again, following this here, we took out the lows and then reversed around 9 o'clock-ish again. Again, counter trend, didn't fully take out the high until later in the day. So if you were to hold and have a lot of patience, you kind of held that for an extra few hours. But if you're targeting the midpoint, brilliant trade. Also came back down, filled this area as well. So potential trade there as well. I'll show you guys a couple more examples and then I'll wrap it up. I know I said that a minute ago, but I actually will this time. Again, took out the low, seen a reversal around 11ish. Into the midpoint, but tapped into this POI area. So again, it's important to understand, guys, you can trade this solidly on its own. However, it's better to align with POIs and things like that, okay? This one, again, didn't really, like for example, I would not have taken a trade. Maybe I could have taken a trade up, you know, based on this POI mitigation, and finally caught an entry here, maybe took a loss here. But this is the better scenario. Like I would have, if I was to enter this trade here based on this wick mitigation, obviously you got a bearish range here, right? Okay, this is a very textbook. I've thrown in a couple of trades here. Okay, so that's your internal bullish range. Obviously we're inside of a bearish range, but this is internal bullish range. As you get a break below this low, which we do, we then wait for a pullback into a POI up here. But then when prices significantly shift into a certain direction, you'll often see a pullback into a breaker. Like this here, as you can see, is a breaker. So you drop to the M1 there and then look to take an opportunity there as well. You can even scale in here as well based on this equal high, the sweep here. If you're up at that time, I personally aren't, so I wouldn't be taking that trade. But this potentially I would have taken. I know it's later in the day, but it's a very textbook setup. So if you want to study this bit of price action, make sure you go ahead and do that, guys. It's 3rd of May to the 7th of May on the Friday there. Monday market opens. So this here is textbook following the breaker mitigation there. But I'll do a video on that in a different time. But right now, let's just focus on the Asia run. What I will do is, as well as I'll just pull up a separate clean chart. This is the pound dollar that I was going over. So you want to go ahead and check that out, you can. We'll pull up the euro dollar. Just make sure I've got no markups on this one, just because I've got some markups here as well. So I don't want to have to remove them. Okay, so just go over a few examples here on EU, just to show you guys that it's not just one pair that it works on. As you can see, we took ever so slightly took out the high here, moved bearish, took out the low, moved a little bit bullish into the equilibrium there. But then the ultimate move was here around 8 o'clock. And as you can see, just shifted to the upside. It didn't reverse already because we already took out the highs over here, which makes sense. But very nice trade there. You know, going off creep there. Took out the low. A nice bullish move. Created equal highs. So if you're targeting the high, you would have probably most likely hit TP. Spreads may have been your worst enemy in that case, but still great trade. A shift to the downside. Mitigation here, potential trade there as well. Took out the high, it didn't fully reverse at the peak until 10 o'clock. Then took out the low around here and traded back into the midpoint, so this high here. Nice scenario, well, potential there, sorry. Took out the high here, reversed at around 7 till half 7-ish. Targeting to lows, very nice. Took out the lows, didn't reverse until a quarter to 12, and then as New York kicked in, we've seen a nice push to the upside, very textbook as well, a nice setup to follow there as well. This one didn't really play out. I mean, reversed at like New York Stock Exchange open, but that's not like you know, you wouldn't have really looked to target up until here. Price is very overextended at this point, and as it has a very low probability of price pulling all the way back up unless it was a high time for mitigation. But no trade there, or at least potentially took a loss. This here too, I mean, you could have took a trade off here, but the midpoint's around here somewhere. So if you're having a TP down into here or down here, obviously this again, guys, is going without any high time frame PY application. Obviously the way I teach in the mentorship on the one-to-ones is kind of different because there's special rules to look for. But as you can see here, didn't fully pull down into this area on which you would have targeted. If you're managing your structure, fair enough, it would have been a winner. But unfortunately, depending on how you trailed your stop loss or how you managed to trade in general, it would have been a loss there. Or not a loss, but break even most likely for a lot of traders. Look at the lows. It didn't fully reverse until 9 o'clock. Very nice. Target the highs. Very nice trade. Okay. Took out the highs. I mean, a huge wick to the downside, but personally wouldn't have been trading that. This is a great example again, just because price is bullish. Swept out the lows. Okay. So again, guys, a couple of rules. Well, before I jump into that, there's a question: does this Asia run still work? Yes, it does, if applied correctly. It's very consistent. I've been using it for a few years now. Obviously, if you want to go ahead and backtest it and collect some data, I would recommend you do that. Now, you don't have to necessarily backtest it in the markets. What I would recommend to go and do, guys, is just go over the 15-minute time frame, look a bit of, you know, back on price action, and just, you know, have that indicator on. Make sure it's between the hours of 12 to 5 AM. And just look at it. Look at which way it's sweeping. Look at where it's heading. And start applying with the high time frame. Look at the high time frame. Zoom out. Is in line with the high time frame. Again, nothing's 100%, guys. So expect it to not work. Sometimes, you know, you could be right 5 times, wrong 5 times, and still profitable with this system. So go ahead and collect the data. See what kind of results you're pulling from it. Refine when necessary and keep pushing forward, guys. It's a very great system. Again, a couple of rules. Just go over, you know, if you're going to apply it with high time frame POIs, significant shift of structure, timing. Timing is very important as well, guys. You know, it's important that you go ahead and test all this data and information out, guys. So yeah, that's pretty much it, guys. Thank you so much for watching. And any questions, anything I've missed that you need to ask about this system, make sure you go ahead and ask me on any of my social medias. I'm more than happy to help you guys out. You know that. And it's been your boy Luke here. And again, check out my one-to-one mentorship if you're interested in becoming profitable. That's it. Thank you guys for watching and take care. See you on the next one.